Recently, Ford declared its Q4 earnings, which were disappointingly below what market analysts had forecasted. Despite the buzz created by the Ford Lightning electric vehicle's launch, the company allegedly lost billions in 2022, with projections of even more drastic losses in 2023. The key questions now are, why is this happening and what can Ford do? Let's explore further. Ford Motor Company, a stalwart in the American auto industry with a rich 120-year history, has undergone major transformations under CEO Jim Farley's leadership. To keep pace with the rapidly changing automotive sector and seize the swiftly growing EVs market, Farley opted to split Ford's EV operations from its conventional petrol and diesel engine businesses. This revamp led to Ford's segmentation into three distinct entities or pillars. The first, Ford Model E, is dedicated to the creation and sales of electric vehicles, aiming to cater to the increasing demand for battery-driven cars and solidify Ford's position in the EV space. The second, Ford Blue, encapsulates the company's conventional internal combustion engine vehicles. This segment continues to meet the needs of customers who favor petrol or diesel-operated cars and trucks, offering a variety of options to meet their preferences. The final one, Ford Pro, is the commercial vehicle division that provides a broad array of vehicles for both commercial and industrial usage. This division deals in both combustion engine vehicles and electric vehicles, tailoring to the specific needs of businesses and fleet managers. Previously, Ford's profits were broken down regionally, but the company now reports earnings separately for each of its three business divisions. This new reporting structure allows Ford to highlight the performance and growth prospects of its EV division, offering a more transparent view of its progress in the burgeoning EV market. Before this structural change, analysts' opinions on Ford's EV future were divided, especially on Wall Street. A group of analysts recommended that Ford should spin off its EV unit into a separate entity devoted solely to electric vehicles. But CEO Jim Farley and other top Ford executives disagreed, opting to retain the EV business within the company. The justification for this was the belief that keeping the EV unit in-house would enable Ford to utilize its existing manufacturing expertise and infrastructure already set up via its Ford Blue and Ford Pro divisions. This strategy would allow Ford to exploit its current resources and operational abilities, providing a competitive edge against EV startups who would need to construct their manufacturing capabilities from the ground up. The idea was to prevent redundant efforts and costs. Utilizing the company's existing strengths made it sensible to harness the skills, experience, and production capabilities that Ford had built up over its long tenure in the automotive sector. Nevertheless, despite this strategic move, Ford Model E, the firm's EV division, faced significant hurdles and did not see the initially anticipated robust start. In fact, Ford reported a hefty operating loss of $2.1 billion from its electric vehicle operations in the past year. The company fell short by $1.1 billion of its own yearly projections and failed to hit Wall Street's profit forecasts. Ford named operational difficulties as the main cause for the underwhelming results. Financially speaking, Ford amassed $44 billion in revenue during Q4, leading to a total annual revenue of $158.1 billion for 2022. However, the company reported a net income of $1.3 billion for the specified period, along with a net loss of $2 billion. Earnings before interest and tax, after adjustments, amounted to $2.6 billion for the fourth quarter and $10.4 billion for the entire year. CEO Jim Farley's dissatisfaction was apparent with the company's lackluster financial performance. He recognized that Ford had a higher potential for the year and voiced his regret at leaving nearly $2 billion of profits unclaimed, profits that were within Ford's power to attain. Farley underscored the necessity for enhanced execution and operational performance to rectify the issues and promise better outcomes in the future. Farley stated, "Saying that I'm frustrated would be an understatement since the year could have been significantly more beneficial for us at Ford." He also noted, "We could have performed much better the previous year. We failed to claim about $2 billion in profits that were in our control, and we're planning to address this with improved performance." The company also announced that the Model E segment is projected to incur a massive loss of $3 billion for the full year of 2023. This prediction signifies that the company has a long path ahead to reach profitability with its electric cars. Despite pitching them as the company's future, Ford's CFO John Lawler elucidated on the expected losses during a press conference. He justified the anticipated financial shortfall by explaining that the Model E segment operates like an internal EV startup within Ford. Lawler's justification draws parallels to other electric vehicle startups where Ford is currently making substantial investments. The company is committed to enhancing its capabilities, acquiring expertise in electric vehicle technology, increasing its production scale, and capturing market share. Lawler's comparison to EV startups experiencing losses in the early phases aligns with the notion that the electric vehicle sector requires heavy upfront investments and R&D efforts. The anticipated losses in the Model E segment illustrate Ford's ongoing pledge to invest in the necessary resources and knowledge to establish a robust position in the burgeoning electric vehicle market. Ford has ambitious plans for its Model E segment, expecting it to reach operating profit margins of roughly 8% by 2026. This is consistent with Ford's total goal of achieving 10% profitability within the same period. To attain this profitability target, Ford's strategy largely depends on a significant escalation in production. The company is aiming to boost its manufacturing capabilities to produce 2 million electric vehicles per year by the end of 2026. This marks a substantial jump from Ford's 2023 goal, where the company aims to manufacture 600,000 electric vehicles. The anticipated surge in production volume is a crucial factor for Ford's profitability targets. By increasing their electric vehicle production, Ford expects to reap the benefits of scale economies, improved cost efficiency, and heightened market penetration. These elements add to the company's faith in achieving higher profit margins both in the Model E segment and overall. Increasing production is a crucial component for Ford's Model E segment to become profitable. By escalating the production of electric vehicles, Ford hopes to leverage the benefits of economies of scale, leading to notable cost reductions and enhanced profit margins. Ford's educational seminar suggests that the Model E section presently operates with a rough margin of 40%. However, they anticipate a considerable part of this profit margin will initially be depleted. This shrinkage can be credited to a range of factors, including the elevated expenses that come with the upscaling of production and the initial funding needed to grow manufacturing abilities. Nonetheless, as Ford speeds up scaling and production, it anticipates significant enhancements in efficiency and cost-saving measures. As the volume of production increases, the cost per unit of manually produced electric vehicles is predicted to drop, resulting in improved margins. The advantages of scaling can be noticed in several facets, such as enhancing supply chains, bargaining beneficial supplier deals, and attaining superior levels of operational effectiveness. Along with scaling, Ford also stresses the significance of advancing design and engineering efficiencies. By perpetually refining and augmenting the design and engineering processes for electric vehicles, Ford can cut production expenses, augment product excellence, and secure better profit margins. Reducing battery expenses is another key aspect in achieving profitability. Batteries account for a considerable expense component in electric vehicles, and cutting their cost can considerably affect the overall profitability of the Model E division. As battery technology progresses and scale economies are achieved in battery manufacturing, Ford forecasts the price of batteries to shrink over time, leading to better margins. While this is quite straightforward to promise, it is yet to be seen if Ford can deliver on its commitments. So, what's your take? Do you believe Ford will manage to salvage the situation and sustain its EV enterprise? Share your thoughts in the comments section.